Ladies and gentlemen, good day and welcome to the Bikaji Foods International Limited Q4 and FY26 earnings conference call. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then 0 on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Ambesh Tiwari from Essential Technologies Private Limited for opening remarks. Thank you, and over to you.
Thank you. Good afternoon, everyone, and thank you for joining the Bikaji Foods International Q4 FY26 earnings conference call. From the management team, we have with us Mr. Rishabh Jain, CFO, and Mr. Manoj Verma, COO. I now request Mr. Rishabh Jain to take us through the key opening remarks, after which we will have the floor open for question and answer session. Thank you, and over to you, sir.
Hello. Thank you all for joining in this call of Bikaji Foods International Limited. Before starting this, one thing which we recently lost a chairman on 23rd of April. This was a great loss for the company as well as for the family. He was a great visionary and a board leader and was an influential figure for the company as well as complete Bika. All this thanks fraternity. Now I can start. So largely, this quarter has been a great quarter from many perspectives. The top line growth was close to 18% plus. And in top line also, our core market has been grown at upward of 15%. This is last many quarters. It was growing at 10 to 12%, but yeah, in this quarter, it has grown a good growth. Export has been doing very well from last 4-5 quarters. Family pack, which is a key, and for this we also started 2 campaigns, which is also Bikaji after September and Kya Baat Hai Ji. So family pack has grown up to 20%. E-com has now become 3% of overall business, which is significant, and growth has grown to over close to 100%. And that's the target what we're taking for this year also. From campaign perspective, of course, these 2 campaigns, this year has been 2 halves, where in first half, 6 months, our core namkeen snacks growth was slow, but after this GST reduction from government, and the 2 campaigns what we started, last 6 months, our momentum in overall snack category, snacking, has been very significant and grown a good growth. And that's what we want to continue for this year. From bottom line perspective, largely from consolidated financial, our gross margin is at 35.6%. This also includes PLI, but yeah, overall this is 240 basis point year on year because PLI was included last year also. From EBITDA perspective, EBITDA is close to 12.2%. So lastly, in this quarter, we started 2 campaigns mid of last quarter largely. We continued the same campaign this year also. And our ad cost is increased this quarter compared to last year to tune of 1.2%. And from EBITDA overall, we close to 88 crore rupees of EBITDA with PAT margin of close to 8%. Overall, from year perspective, so largely our overall yearly revenue from operation is close to 294 crore rupees at 9.5% volume growth. In last quarter, our volume growth was upward of 16%, which was highest in many quarters. Overall gain at a full year level is 35%, 35.1%, and an EBITDA margin is 13.7%, upward of 120 basis points compared to last year. From capacity perspective, so largely we not added much capacity last year, but yeah, this year we have a plan to increase capacity in sweets, which is going on. From distribution perspective, I request Manoj to...
Yeah, thanks, Rishabh. So, one of the key growth driver what we had called out was the continuous increase of footprint, which is distribution. So, we delivered the target what we had taken for ourselves was to cross 3.5 lakh outlets, which is what team has done. And this increase has come across all our core focus in other geographies. These campaigns what Rishabh just spoke about did extremely well, and that was one of the reasons for our higher growth in the large pack. The large pack has outperformed, and these marketing campaigns have worked very well. From core geography standpoint, Bhuji out of Bikaji was a major and a great success. And the numbers speaks louder than what I would say. It is that if one is to look H1 versus H2, so there is a multiple growth in that stuff. And in UP, we did the campaign Kya Baat Hai Ji, while looping in Pankaj Tripathi in that. This campaign also did very well for us. And that's what is the reason that we look at quarter 4. So our family pack has grown at 20%, while Impulse grew at 14%. So there's certainly room of improvement on Impulse, but family pack outperformed there.
From key initiative perspective, this year also has been very significant for us as we have gone SAP Go Live this year in December. We also gone Darwin Box Go Live. There was new logo launch in January this year. We completely changed our packaging, revamped our complete packaging, changed logo. Our investment in the Hazelnut factory last year. So this year has been very good for the brand. They crossed 100 crore revenue this year and targeted to grow 50-60% year on year for next 2-3 years. Our annual report has been ranked 42-42nd in American communication professionals. And from export perspective also, we crossed 100 crore first time this year. From revenue from operation perspective, in quarter 4, we crossed close to 720 crore rupees of revenue with a EBITDA of 88 crore rupees and PAT of 56 crore rupees. From working capital perspective, our working capital cycle is largely same compared to last year. Largely same. There is not much increase in working capital cycle. From raw material perspective, this war, it was started in February and March. We have seen a significant increase in our packing material and edible oils largely. Edible oil has increased to tune of close to 12-13%, 14% in fact, and packaging material has increased to tune of close to 25-30%. But overall, we have taken a price rise in April this year, and which will suffice largely for the current price hike what we are seeing in raw material and packing material. So we'll see how this war goes, and we need to take either another price rise or not. But yeah, as of now, we have taken a price rise which will manage our overall gross margin and EBITDA. Thank you very much. We are happy to take all the questions.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Avnish Roy from Nuvama. Please go ahead.
Yeah, thanks and congrats on good performance. My question was, now Q1 almost 50 days are gone. So are you seeing a good momentum continue in Q1 also based on the sales and volume trajectory in Q4? Any divergence you are seeing in Q1?
Hi Avnish. Momentum what we are seeing is it's a continued momentum. So post November, the way of the trajectory we are on, this continues. This also is the outcome of the kind of investments in demand generation what we have done thus far, and is giving us and keeping us on the same trajectory. So in spite of certain price being passed to the consumer, yet we haven't seen any slowdown in terms of the demand.
Also, we've seen two turbulence in this last 50 days. One largely Bengal election, and our factory, most of the laborers are Bengali. So largely some of the laborers have moved to Bengal for elections and all. And we've seen some production loss, but the overall momentum seems very strong. And of course, our chairman lost, so the factory was shut for 2.5, 3 days. That was also, but overall, the momentum side, what we are seeing good momentum.
So just to get clarification on these 2 points, 2.5 days factory shut and Bengal, the workforce had gone. Did it lead to sales loss also, or you had pre-planned? So in terms of sales, there is no impact. Could you clarify on that?
Yeah, so the demand we were talking of, that's where you started off, so there's no issue in demand, very well created and that's on. But yes, from supply end, yes, there were some disruptions because ours is not a phasing wherein that most of the billing happens in last few days. It's a daily progression, a very seamless day on day what we do, right? We have been talking in our earlier calls as well that we work on 2 days FG kind of customer, even less than 2 days. So the production impact has certainly resulted in some sales. The quarter could have been even better, but yet overall, if you look at this quarter, will be well in line for what we said.
And the Bengal workforce impact that will come in Q1, right?
Q1, yeah. So this Bengal election first phase was on 23rd of April. So these people, and after SIR and all that stuff, so there were no choice to hold them, or no way one could have hold them. And so majority of them went on leave. And so from 20th of April till say 10th of May, these people started coming back. There was disruption of the manpower problem in that stuff. But we managed it somehow. There was some mistake.
So just to close this point, 2.5 days because of the loss which had happened, unfortunate, plus the election related. So can we say around 4 days of impact overall?
Yes.
Second question is on the inflation. You said palm oil and edible oil inflation is around say 13-14%. I wanted to understand packaging inflation because it's linked to the crude oil, and crude oil inflation is much more than the 24-25% which you mentioned. So if you could clarify on that. And have you taken a shrinkflation, so grammage cut, or in the larger packs it's more of a price hike? So if you could clarify on those two.
Yeah. So from packaging material inflation, we are seeing that the average packing material cost was close to 190-200 rupees, has gone up to 260-270. But it has again came down to 20-25. So it's not on high side as of now. It's manageable. So, but yeah, overall, what we've done, we have increased price in family pack and we have reduced grammage in impulse pack. That's what we can do largely in impulse.
Understood. Okay, that's all.
Yeah, overall, the price rise was close to 3%, which is equally manageable, which can manage this increased RM and PM price.
Okay, thank you. That's all from my side.
Thank you. We take the next question from the line of Siddesh Deshmukh from IIFL Capital. Please go ahead.
Hi, this is Percy Panthaki here. Sir, what is the quantum of price hikes that you have taken?
Yeah, so the price hike was close to 3%.
And do you think you will have to take more given where the commodity costs are currently?
Currently, as of now, this is manageable for us. We can manage at the same DM largely at this current increase what we've taken. We had good amount of packing material orders which we have blocked, and what we see that this PM prices came down from the price rise what we've seen in early days of war, but it has came down significantly, so it's manageable.
Okay. Secondly, wanted to ask, if I look at your EBITDA margins first half of the year versus second half, there is a sort of lower second half margin versus first half. So is this something normal seasonality, or is there some other reason behind that?
So largely, our major ad cost which comes in during festivity. So normally in every year our major ad cost comes from August to December. But this year we continued 2 campaigns in the fourth quarter also. So fourth quarter ad cost was little significant higher compared to last year quarter. But overall the ad cost was close to 2%, which was last year 1.6% on yearly basis.
Okay. But that 40 basis points YOY I understand, and YOY the margins are not a problem. But I was looking at more versus the first half margins are close to 13.5-14%, and the second half margins are close to 11%. So I was trying to understand that because the movement is 280 basis points between first half and second half. So is the ad spend the explanation fully, or is there some other reason?
So majorly ad spend. And there was 50 basis point provision for doubtful debt which we taken last quarter in fact, which was one time.
Okay, understood. And can you just tell me what is the ad spend as a percentage of sales in 3Q and 4Q?
So 3Q and 4Q ad cost was close to average 3.2, 3.3%.
Okay. And in first half, it was like 1% or something, is it?
1%.
Hello?
Yeah, 1%.
Oh, got it. Got it. Secondly, sir, just wanted to understand this difference between Concall growth of 19% and standalone growth of 15%. So is there any inorganic remaining now, or it's just that the subsidiaries are growing at like 70-80%, which is giving this kind of growth?
So from Concall to standalone, largely we have Bikaji USA, which is a core ethnic snacks business, which is doing good. We have Ariba Foods, which works for us for frozen segment. And of course, this THF. THF is growing on very well. This year they've grown at close to 100%, 130% to cross 100 crore rupees. So retail division is going on very well. So the difference between ethnic snacks and overall is close to 2.2%, which is THF retail.
Understood. So there is no sort of inorganic portion this year on a YOY basis, right? Everything is annualized.
Yes.
Got it. That's all from me. Thanks and all the best.
Thank you. We take the next question from the line of Darshit Vora from Asit C. Mehta Institutional Equities. Please go ahead.
Yeah, hi. Good afternoon. Am I audible?
Yeah, you are.
Yeah. Thanks, and congrats on a good set of numbers. Just wanted to firstly understand if you could quantify the CapEx amount that you alluded in your opening remarks.
What amount?
CapEx amount.
So CapEx, largely what we'll be doing, there's two CapEx. One is the factory which is coming in Bikaner. And so this year we'll be doing close to 100 crore rupees of CapEx. That's the plan. Close to less than or close to 100 crore rupees CapEx. And there is big warehouse which is came in. The CapEx has been done. It will came installed in, I think, in next 15-20 days. So that will suffice. That will solve sort of supply chain problem.
All right. And secondly, just wanted to get a sense on the Western snacks portfolio. So this quarter we saw about an 8% kind of increase year-on-year. So, if you look at the entire year also, we see a kind of 7% kind of a YOY increase. So how do we see this moving forward in terms of?
Yeah. So generally, if you look at, so just not Western snack holistically, if we look at the quarter 4 has been a 16% volume growth, wherein the ethnic snacks is in line with overall volume growth, which is 16.1 value growth. Packaged sweets did well. Western snacks, one of course now, the 5 rupee pack, as I spoke now in my earlier statement as well, that the trajectory what moved was more on the family pack, and the family pack is more on the ethnic side. So perhaps that's what could have been better. And to your question that going forward, if we look at now the quarter 3, where it was 25% growth in Western snacks itself. So we will get back to that stuff, and Western snacks will grow 20% plus if you look at going forward.
Okay.
At an level as well, if we look at, so the annualized level, first half and second half was a key a major contrast in terms of growth across categories. And even here, if we look at ethnic snacks, is at 11% in that stuff. And while Western snacks was better off, but then because of this poor quarter 4, this has come down in this one. But going forward, this will fall in place.
Okay. And are we taking into consideration the grammage cut impact? Despite that, we'll be seeing that 20% kind of a growth?
I think that's now a new normal in terms of as the inflation comes in, grammage starts coming down, and as you know, there's deflation or there's cooling of commodity prices. Companies do pass it back to the consumer. which is what we saw that during this GST changes. So most of the companies, and so did we, passed back these extra damages to the consumer, which now again with post-war after effects maybe we will cut down, but this will keep going and coming. We don't see much of a difference in that stuff. One thing I want to bring it to the table that overall, if you look at the Western snacks growth in the last quarter for the category has also not been very bright in that stuff. So relatively, if you look at 8.5% growth, while certainly we could have done better, and we know that what is that now we have to press on. But overall, Western snacks was also on a little slowdown.
All right. That will be all. Thanks so much, and all the best.
Thank you.
Thank you. We take the next question from the line of Ronak Shah from Experience Securities. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. So my first question is, am I audible?
Yes, Ronak, please go ahead.
Yeah. So my first question is regarding the core versus focus market. So ideally, the long-term aspiration of the business is to grow the focus market at least by 1.3 to 1.5 times. However, if we see the fourth quarter or FY26 as a whole, the growth rates are not that different. So what is holding us back from getting those sort of growth rates into the focus market?
So, if we look at in terms of the growth of focus markets, vis-a-vis category is over-indexed in that sense, which means Bikaji's performance of whatever we are doing now is ahead of category. However, to your question and to what we intend to do is of our 1.5x growth system. So there have been certain challenges. There have been, which keep coming and we keep addressing. So like I just spoke about that, UP, one of the large focus markets. We made those investments and results started coming in. So going forward, what we see and what we have been saying would continue, that the focus state has to grow faster. This four states did extremely well in quarter 4. Is on the back of like the mega campaign what we did Bhujia, and the biggest consumption happens in these 4 states as well, and Bhujia outperformed, and that's what helps these 4 states over deliver. In fact, going forward, if one was to give some guidance for next year, so 15% growth would not be sustainable. What we look at it as, that's about 13 plus minus kind of a growth we look at from core states, and from focus states would be upwards of 20%.
Understood. And when we see the EBITDA margin profile ex of your PLI benefit, in FY27, considering the price hikes plus the inflationary trajectory which we are sensing, how we are expecting the margins to flow in. On top of that, we are having a higher focus on ENP as well. So overall, how you are sensing your FY27 EBITDA margin?
So from ad perspective, ad budget this year will be close to 2%, which is same from last year. So we're not increasing our ad budget, number one. Number two, from EBITDA lens, we've taken one price rise in April, what we've seen the price increase of raw materials and packing materials. So that will suffice overall cost pressure what we got largely. So from that perspective, gross margin, the target of gross margin at Concall should be same for us. We need to maintain the gross margin this year. That's important. That's challenging also because that's a very frustrating year as of now. Started with a very frustrating year where we're seeing daily fluctuation in edible oil as well as raw material depending on how war reacts. But yeah, overall our target is to maintain same gross margin, and that's. And if EBITDA lens largely, so if we maintain the same gross margin, EBITDA will improve because there will be a lot of fixed costs which will be fixed, and there will be a lot of production from outside Bikaner, which is CNU, will also increase. So there will be a lot of operational efficiency which will come in this year.
Understood. And lastly, on the retail business front, so we are seeing very good traction over there. So over a period, how we are thinking to open the newer stores. On top of that, how the overall optics and all are looking like.
So from retail lens, largely our major focus investment was on THF last year, and THF is doing extremely well. So they have close to 19-20 stores. Intent is to open 8-10 stores every year for next 3 years. next 3 years, and to grow a business at 50-55% top line growth. That's the target. And that's the best part, they're profitable. So they're not EBITDA dilutive. That's important for us, and at the same speed they want to grow for next 2 years. So from Bikaji lens also, we opened outlet, 2 outlets will open in next 6 months, and we will see how we grow our own retail business.
Understood. That's it from my side. Thank you.
Thank you.
Thank you. We take the next question from the line of Abhishek Mathur from Systematics. Please go ahead.
Yes. Hi, team. Thank you for the opportunity. Just wanted to check, out of our direct reach of about 3.5 lakh outlets, what would be the split in terms of how much is in focus markets, how much is in core, etc. And also, if you can, so we have a target of about 5 lakh in 3 years, about 50,000 per annum. Of that 5 lakh, what is our target split in terms of how much would be in focus and core and the others?
Yeah. So currently, if you look at our 3.5 lakh outlets, so about 120,000 outlets is in core states. So here the distribution is more led to the wholesalers. So whereas if you look at indirect reach, it's about 8.2 lakh. Coming on to focus states, so we cover about 1.7 lakh outlets in the focus states, and here our indirect reach, so the wholesale channel, the other stuff, our overall reach here is 3.5 lakh outlets. And in the other states, we cover about 60,000 outlets. This all adds up to 3.5 lakh outlets. Going forward, the increase is to come from the core as well, because that's where now we are going down cost strata, increasing, instead of keeping our dependence on wholesaler, we are trying and we are getting in directly there so as to sell range, so as to establish NPDs and the stock weight in the store. So that's what will help us drive same store growth in core states, whereas the key driver would be distribution reach in the focus state. So that's where the majority of the new stores would come in.
Right. So if I hear you correctly, the delta of 150,000 in the next 3 years, most of it will come from the focus, will be in the focus state. Is that right?
Right. So this would be from core and focus state. Other states would be incidental because that's where we do not have as much priority in general trade. So there we do need-based kind of a stuff. So the other state sales is driven by the growth. What we take pride on is on the basis of the other channels such as modern trade, e-com, institutions, so on and so forth. We're doing extremely well in all that stuff, and which is what is getting the brand recall. So there also, if you look at the indirect reach in the other states is also about 1.8 lakh outlets here.
Right. So, and secondly, on the raw material inflation front, you have talked about the packaging material and the edible oil. But in terms of our pulses and flour, that part of our basket, what is the trend that you're seeing on inflation, or is it benign as of now?
We have not seen any major price rise in all pulses and flour.
All right, great. So thanks and all the best. Thanks.
Thank you.
Thank you. We take the next question from the line of Soham Samanta from Motilal Oswal Financial Services Limited. Please go ahead.
Yeah, thanks for the opportunity. So just wanted to check on focus market. Last time we called out that Delhi market was not performing well while UP has been doing good. So on a full year basis, how is these two major markets have been doing in the focus market, UP and Delhi?
Sorry, Delhi and which one?
UP.
So UP, if you look at in terms of TAM, so out of 6 markets, UP is equal to rest of the 5, the focus states. So that's the size of price for UP. Delhi is not as big in terms of, however it is, it has a weight, but not as big the TAM there. In terms of our performance, UP has outperformed, so has brought in the overall numbers. Whereas Delhi, as we said last time, that has not done well, and we have not invested also behind Delhi as much in this stuff. So Delhi has brought these the growth numbers down only.
So in UP, what kind of growth we are expecting? 20-25% kind of growth, or higher than that?
So upwards of 20% growth here.
Okay. If we want to maintain that 15% kind of top line growth, in that case, on product wise, how we are looking like ethnic versus packaged foods? As we mentioned that western snacks could be a bit a higher growth category, I mean 30-40%. But ethnic and packaged foods, how we are looking for next couple of years?
So if you look at the critical element to your question, that is one is to deliver 15% year-on-year growth. So one category you cannot choose to ignore is the traditional snack, which is about 70% of our business. So that has to take lead. Followed by the second largest category is sweets, which is about 12.5% to our business, right? And this is where when we see, when we are on our strat plan, so this is one category where the shift from unorganized to organized is going to happen. So for the category, this growth is going to be large, and we cannot miss the opportunity. So therefore, this would be second one. Third is western snacks. Our base is very small, so even 20%, 25% will not add as much value to our overall console growth of that stuff. But yes, western snacks will continue to grow in a double digit, so 20% plus kind of a growth year on year. Western should do. And this is what we are talking of also, that in next 3 years, currently what it is 8.5% Western contribution should move to about 11% in say next 3 years.
And so last question from my side, in core market like Bihar, Assam and Rajasthan, within 3 markets, what is the most growth driver as of now? How do you look each market?
So no, say again, what is the?
So basically, what is the fastest growth driver within these 3 markets?
So Rajasthan, in fact, is our homeland in terms of closest to Bikaji and all that stuff, and is very large. So put together, Bihar and Assam is equal or less than what the Rajasthan market is. So the delta what comes, the growth what comes, Rajasthan is the largest. This year, if you look at when we report number as 4 and 4 delivered 15%, so it's not just one state, it's a holistic performance, wherein all these states have done extremely well. And I think all are inputting the team, what they sweat behind these growth, I think this will pay us dividends. The campaigns what we did, so when we say Bhujia, also Bikaji, that was a very straight campaign because we witnessed in first half that there was a slowdown in Bhujia category per se. So I'm not talking Bikaji, I'm talking of overall Bhujia as a subcategory. And we being market leaders, it was our responsibility to spike up this growth, build this category further, and hence these campaigns were rolled out and worked very well for all 4 states.
Okay. Thank you, sir.
Thank you. We take the next question from the line of Shirish Pardeshi from Motilal Oswal Financial Services Limited. Please go ahead.
Yeah, hi Manoj, Rishabh, thank you for the opportunity.
Thank you.
Yes, just 2-3 questions. About 3-4 months before, there was a lot of noise around GST rationalization, unorganized players will exit. There is a lot of momentum which is said that the unorganized player will not be able to compete at 5 rupees, 10 rupees, or maybe compliance burden will happen. So in your experience, given this framework which is now implemented, which are states you have seen this has been beneficiary to us, or is there realistically anything has happened? Because parallelly, we might have got the benefit of 5%, but inflation is also inching up.
So I think very nice question, Shirish. And if you look at what we did, so the family pack there, this is impacted more in that stuff. So and as our numbers are, I'm sure for other companies also would have done better. In this 5 and 10 rupee play, the regional and local nuances are also very, very high. So it is like, few new players get in and few get weeded off kind of a stuff. So that's what is the phenomena and the trends what we see. But going forward, if you look at, so it will not, and this is what we always have been calling it out on our call, that the results of the impact would be seen over 2 to 4 quarters, you will see the impact in this stuff. But certainly this GST regime change would benefit the organized players or the larger players.
But really, is there any trend you are picking up that the national branded players are getting these sales and unorganized are tapering down, or is too early to judge? Because parallelly again, I'm using the word inflation is inching up.
See, unorganized, when you say so unorganized, you don't track because you don't get data. It is like, when you do market visits, you get some sense inside. But yes, if you talk about the local and regional players, so yes, so this is where certain players, we have seen that the kind of traction what they had has slowed down, is not as much. The kind of trade investments they were doing, it's a little muted stuff. But for their survival, they will certainly do for few quarters at least. So I think the right time, maybe next quarter onwards, and as the year will pass by, you will see those impacts coming in.
Okay, sorry, I'm stretching. Let's pick up a UP as an example. So what happens to Avon, Apricot, Evita? These brands are still existing, but if I check on the ground, they're still growing.
So see, Evita and Apricot is not a small brand for that reason. If you look at the kind of players in UP itself, there are 200 listed brands there, right? Top 10 brands, if you look at after that, any brand is less than 1% market share. So that's the fragmentation in the UP, though which actually is not a state, it's a country in itself. So that's what it is. Morano, another brand, if you look at on account of its UP sales, it's amongst top 10 players in the country for that stuff. I'm talking of the players which were pure regional and local, like Jain, Popat, some Mahesh Namkeen, which is only in the geography of 100 or 150 kilometers, like CK Namkeen in West UP. So those are the ones I'm talking about.
So like of Adarsh and all what you're saying.
Exactly, you got it.
Okay, got it. Second, on slide 10, we have given certain promotions which we ran. Consumer offer, Bikaji campaign, UP campaign with Bikaji and the other packaging. So on a broader terms, if I split tangibly you may not be able to quantify, but is in the current era of packaging or maybe packaged food industry itself is so complex, such kind of measures has brought any benefit to the company in terms of quantitatively you can say that we got distribution expansion or volume growth or maybe some percentage of sales would have happened. Just ballpark numbers.
So Shirish, you come from a FMCG background, and so whenever a company plans any consumer offer, so this is not just to subsidize sales, it's always with the objective of that will this give you 20% extra, 30%. This again is on kind of investment you are doing. So for example, Paytm, if you look at it, this comes at negligible cost to us. So hence, if my sales team is to plan, so I cannot have very bullish number on this stuff. But yes, certainly delta will come in, and the investment what we do, the kind of focus what we bring in, are the larger or the big ingredients to get a good result out of it, which is in terms of that, the motivation, so the team, the posters, retail activation around that, buzz what you create. So there is more power of execution on ground, and which is what gives us data for sure. And the number speaks more louder than what I can speak on this stuff, that you look at what was quarter one or quarter two, and then what is post, so when these campaigns were up on air or was on ground. So this has certainly given this stuff. Any company, when they do these kind of offers, there could be two objectives. One is that if they are seeing decline, they say that I want to hold it. And holding on those numbers in itself is an achievement, because then the relative is at what rate they were falling down. And the other is that what growth are they wanting to, the next trajectory you want to go on. So those are the measures what we see, what we track, and based on this will call out for our next promotion in the campaign.
So I understand, Manoj. We both are from the same background. So my worry is that these are all routine activities. We need to do promotion, we need to excite the consumer, but then we are creating a benchmark. So it becomes more challenging that the next promotion has to be better than the previous one. So that's why I was worrying, because we are building a base.
Yeah. So you will see the next campaign will be phase 2 of it. So certainly will not repeat the exact stuff. You will see building. So let's say last year in UP, what we did was that trying to establish Bikaji. Now the part 2 would be, a different communication, would the challenge statement, identified challenge statement or opportunity, we will try and address with the campaign. So it will not be airing of the same film what we did last year. So that's what is, certainly I think you have a very good point, and we work in the same way itself, not to repeat, to build on that.
All right. My last question, Rishabh, on Ariba, DHF, can you give us how the momentum is picking up? I mean, you have also given some press release last time saying that we are looking for JV in Nepal. So in terms of scale up, in terms of our 100% acquisition, path to profitability, something if you can tell?
Yeah. So from THF lens, THF, when we acquired, the last year top line was close to 50 crore rupees. This year they double the top line. And what we see that THF will grow at 50 to 60% year on year for next 3 years at least. They have strong plans. Largely they are focusing on the northern part of India, UP, Haryana, Punjab, and they can go towards Bihar in that part. Largely that part they will target on for next 3 years. So from THF side, this retail investment is going on very well. Ariba is just a manufacturing capability, and they are just solving our export problem, which was there before Ariba, when the ways were dependent on other vendors, and during their peak time they are not able to supply. There was always supply chain issue, and you will see that after Ariba, our export growth is upward of growing at 50-60%, and this year also this will be the same momentum what we see this year. So Ariba is largely manufacturing facility. Of course, profitability is the focus because they cannot see an EBITDA dilutive to us, and that's what we are working on. Currently they are at low utilization. This year they will be at close to 55-60% utilization, and that will solve this EBITDA issue also.
Okay. Just last question. On the warehouse what we were trying to build into the adjacent location, is it fully covered operational? I mean, is there any benefit we started expecting?
So trials have started 2 weeks back largely, and it will start completely in by 15th of June. So by end of this quarter, by next quarter we'll see a benefit in this, and of course we'll see benefit because currently we have space of keeping finished goods less than 2 days, and this warehouse has capacity to keep storage of around 6 to 8 days. So of course we'll see a momentum, we'll see production running seamless and all. So we'll see momentum in second quarter.
All right. Thank you and all the best.
Thank you.
Thank you.
Thank you. We take the next question from the line of Nitin Gupta from HDFC Securities. Please go ahead.
Yeah, thanks for taking my question. My first question pertains to the very first question around people movement from our factory. So when you have highlighted for West Bengal laborers have moved from 20th April to 10th May. So I just wanted to reconfirm how many days of sales got impacted. So that time answering to that you had confirmed 4 days. I just want to double check on that.
So largely there are 2 things. One overall few labor movement from Bikaner to Bengal, and there was a loss of a chairman where a factory got closed for 2.5 days. So overall close to 4 to 5 days, 4.5 days loss of production was there and now close around 16-17 from this Monday, all the laborers came back and our production is in full swing. So we'll try to cover this, but yeah, till now the loss is close to 4.5 days.
Okay, so 4 to 5 days, it's more of a scattered impact, not a continuous impact. Okay, it's fine. And second, just wanted to understand how at a Concall level, how do you see the growth for FY27? And also wanted to sort of understand how we are placed with seed. So was there a capacity constraint? That's where the growth in last 2 years was around 6% CAGR, or any other reasons you wanted to cite for the seeds business slowdown?
So some seeds largely, of course, that's more of manual. So capacity was constrained. In seeds there is different challenge. During festivity we have capacity constraint, and during non-festivity we have very surplus capacity because during festivity we work at 100% utilization. And so we are building a sweet factory in Bikaji, which will solve this sweet production issue. And also we are trying to build all season sweets, small pack, 5 rupee, 10 rupee pack in sweets and cone puffs and everything. So that can be all season and that can improve overall growth of sweets category. And from sweets largely, our this growth was close to 9%, and our target is to be at 11.5-12%. That's the target what we're taking on. We're not so on sweets, 11-12% growth. Our major focus will be on our ethnic snacks and western snacks.
So thanks for the answer, but the way Manoj has highlighted, like big part of formulation is pending on sweet side. So don't you think we should target higher growth, or is there a genuine sort of constraint in terms of driving this formulation and the growth?
No. So, unless I'm talking on sweets business, if you look at these 4 months, the festive from say Rakhi till Diwali, 80% of our sweets business comes in these 4 months, and then balance 20-25% comes in 8 months. So in these 4 months, we are overutilized. Our output is it exceeds 100%. So overtime and all that stuff starts happening. Whereas in rest of the time, it is very poor utilization. Now that's the dichotomy we are in. If we increase capacity, so which means that in off-season time we will be further underutilizing our capacity for this stuff. So that's the stuff, and which is what we are trying now. That how do we make sweets around the year kind of a category, leveraging on our e-com modern trade stuff, and that's the work which is on. So what Rishabh spoke about is that when we build budgets in our annual operating and all that stuff, we have kept sweet as about 12.5% growth. However, the working is on that how that we can exceed these numbers, because that's where the opportunity is. Now how soon and how much we explore on that stuff would be on our capability and speed to act.
Thanks for the detailed answer. Now this is very clear. Last question pertains to how we are placed with e-com and particularly quick com, and any thoughts around quick com seeing a faster growth convenience channel. So in terms of the portfolio expansion, maybe leveraging the third party, we wanted to do something for the quick commerce to ride on the faster growth rate. Thank you.
So e-com certainly as a channel is doing well for the entire FMCG or even other categories as well, and so true for Bikaji. If you look at last year, our e-com contribution to overall business was 2%, which now has moved to 3%. So that's the kind of business shift or the importance this channel is gaining. This channel has delivered about upwards of 75% of growth, whereas against company's growth of far less, 11%, 12%. That's the kind of over-index growth. We are present across all players and have a strong JBP, so the joint business planning for the year, quarter, and so forth. So the growth drivers are, of course, one is that inorganic growth, which is that as these accounts are getting into from metro to tier 1 to tier 2 and further below. So that's the inorganic growth, how we look at it is. And also what we're doing is that in the increase of number of SKUs range on these platforms. Now, when we speak to e-com platforms or Q-com platforms, what they're saying is that their growth in the metro towns is getting stagnated because they've exploded for what they could. So even they are looking at the out of the box thinking that how do we grow metro, and therefore new categories, premium stuff, so let's say introduction of new sweet range and all that stuff, which is what would certainly benefit us and these channels as well. This is what it is. So we see a huge growth, continued growth in this channel for us next year as well.
Sure, thanks a lot and all the very best.
Thank you so much.
Thank you. We take the next question from the line of Mahima, an individual investor. Please go ahead.
Yeah, hello. Hello, am I audible?
Yeah, you are.
Okay, thank you for this opportunity and congratulations for your result. I was asking that as lifestyle changes, are you planning to enter into a healthy snack segment?
Frankly speaking, there's nothing called healthy snack. There could be less unhealthy snacking, right? And in our portfolio also, there's a long list of SKUs which fall in that space. So in terms of future ready, we are, right? And there's a range. But today, if you look at now, the contribution of these categories is by far low. Today, the companies which are surviving is purely on the QCOM platform. You will still see these the clean label products kind of a stuff. But when you speak on the masses, this is not true for now. We perhaps are 5-6 years behind time in Phoenix as many years. You will see that these things will start picking up even faster. From our readiness standpoint, yes, we have the entire range with us.
All right. Thank you so much and all the best.
Thank you.
Thank you. We take the next question from the line of Utpal Saikia, an individual investor. Please go ahead.
Yes. Hello. Thank you for taking my question. First of all, I'd like to pay my heartfelt tribute to the founder chairman of Sivrat Nagwalji. So I have actually two short questions. The first one is, as a company is trying to build consumption habit of bhujia and other Indian snacks in the Western countries, so how are the consumers' behavior evolving? Are we seeing a good momentum? And the consumer primarily in the Western market, primarily is the consumer primarily of the Indian origin, or are we also attracting mainstream Western consumers?
So this you're talking from the export standpoint, right?
Hello?
Hello, this question is more from export lens or from domestic? So if you can clarify, I'll answer accordingly.
No, it is for export oriented.
Yeah, thank you. So one is that there's huge Indian diaspora, right? So that is our primary PG, which is what we focus on. And there, if you look at now, the two approach of growing business, one is that you grow category. So for the category leaders, if we were 50% market share, then our task would be that how do I grow consumption, grow users, right, throughput or occasions of consumption, right? That was if I was major player. When I'm not a major player, then my job is not to build category there. I'm not looking at that how many more people have started eating bhujia there. I will look at that how do I eat share that, today if they are eating of competition or some other players, other category, how do I get them to my fold? So this is what we are working on for overall namkeens, what is called the frozen items, because there we are gaining share from the competition. We are not building category. For our bhujia, which is our hero product, and if you look at across players, Bikaji, bhujia is number one in the bhujia segment. That's where we build consumption, and our consumers, to your question, is not just Indian. What we see when we travel to these places, when we interact to our consumers, there. So there are lots of foreign origin guys as well that who like this snacking. If something is very famous about India is, one is tourism and second is food. And India's food is appreciated across. We are taking this food, this snacking stuff to their country. This is gradually shifting. It's not a major shift, but it is not just stuck to Indian diaspora. It is the foreigners as well who consume our product.
Thank you so much.
Thank you. We take the next question from the line of Darshit Vora from Asit C. Mehta Institutional Equities. Please go ahead.
Yeah, hi. Thanks for the follow-up. Am I audible?
Yeah, you are audible.
Yeah. So just wanted to pick your brain in this Western snacks portfolio again. Just wanted to understand why do you think the industry's growth is coming low for the Western snack front? And the other part to this question is that if the industry growth is kind of moderated, then lower than Western snacks, and how do we plan to grow higher? Is it distribution expansion or like innovation in products? What else?
So I'll take your latter question first. See, one is that we have very small share. If you look at it at all India level, at Western snacks is 1.1% market share. So it's a drop in the ocean. That leaves us with the opportunity of disproportionately high growth. Theoretically, this is one. Now to your first question, when we say relatively, so these growth trends keep changing. So if it is down, does not mean that it is the right takeaway would be when you see the declining trend that over last 4 quarters this is coming down. Then you can extrapolate and come to some conclusions or correlation of that stuff. One quarter in particular leaves us with it is just a reference point. So please now consider that if Western snacks is not done well, is a reference point only.
Okay, got it. And secondly, just wanted to clarify on the gross margin front. You said that you're going to maintain margins on the gross margin front. So is it like margins or absolute gross profit you were talking about? Because you took a price increase. You earlier alluded that we will be maintaining gross margins. Do you mean like gross margins or absolute gross profit? Just wanted to clarify that.
The gross margin is more percentage.
Alright. That'll be all. Thanks so much.
Thank you. Ladies and gentlemen, we take that as the last question and conclude the question and answer session. I now hand the conference over to the management for their closing comments.
Thank you so much for taking time out for the call. It was a good interaction and we tried and answer most of the questions. Still, anyone felt left out, happy to get connected separately or through our relation manager. With this, thank you so much and look forward to connect again.
Thank you. On behalf of Bikaji Foods International Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your line.